I think there was an awful lot of hype around blockchain, particularly post the in the aftermath of the COVID crisis. We saw a huge activity in sort of the online world, which is obviously a strong place for more blockchain related activity. We've seen huge sort of boom and then subsequent bust in cryptocurrencies on a number of occasions. The 2021-22 experience was not the first time we've seen a potential bubble in crypto assets, and I think a lot of people saw the sell-off that we saw last year and viewed that as we can call an end to this craziness now. The reality is that there is still a place for crypto and blockchain more broadly. It may be a slower burn, and actually, frankly, that would be good news rather than the boom and bust sort of short-term cycles that we've seen in crypto markets more recently. But the reality is that slower burn, that uptake of technology and that usage of technology is still very much there, and it's still an area that investors can benefit from by sort of making the right decisions around getting exposure to it.
And the opportunity obviously exists when there's people underestimate the potential of something in the future. So
yeah, one of my colleagues, on the asset allocation research side, says that the best time to buy is often when you have to hold your nose and everyone else is saying it stinks. So holding the course, taking a sort of more longer term view is it's a sort of classic of the investment industry. We all say it's the way to invest. Not everyone manages to do it. One thing I would say is that when we look at the behavior of the investors in our ETF, I would say that most investors are taking that long-term view. They're holding the course. We saw last year, so in a year where crypto markets collapsed and equities linked to blockchain underperformed, we actually saw net inflows rather than outflows. Now that was about inflows in the first quarter and then some offsetting outflows in the subsequent 3 quarters of the year, but very limited in terms of the selling that we saw in reaction to what was happening last year. So I think most investors in this space are taking a long-term view.
You sort of have to, with an asset class that's so volatile, you sort of have to take this long-term view, don't you, to go through the ups and downs like that.
Yeah, I think it's very dangerous to try and pick buying moments.
And in terms of use cases, what have you got anything in mind you think is going to sort of any use cases that might lead to mass adoption of blockchain technology in daily life, either for businesses or consumers?
Yeah, so I think there are already some great examples where blockchain is already being used, and you perhaps don't even realise it. One example is the Food Trust Network, which is a system that's been set up and is being run by the IBM blockchain consulting group, so their consulting division, and that's bringing together an amalgamation of food producers, food retailers and food suppliers, and using blockchain technology to track the supply chain of food deliveries. Now, that may not sound like the sexiest and most exciting thing, but by being able to directly track by being able to directly track the movement of, say, I don't know, a head of lettuce from the greenhouse it was grown in to the plot in the greenhouse it was grown in, to the refrigerator it was kept in, the lorry it was transported in, to the shop it was taken to, the warehouse it was taken to, wherever, all the way through to the journey to the shelf in the shop, has potentially huge benefits in terms of disease control and efficient cost control around the supply chain in food. And that's being used today by the likes of Walmart and Carrefour and Nestle and so on, are all members of that consortium that are supporting that blockchain use case.